Everyone, welcome to Shura Gains channel. I hope you are doing good and I really hope you have subscribed. If not, please go ahead and subscribe to our channel. Thank you. Let's begin today's video. In life, hard work is imperative, but smart work is equally necessary. Besides diligent hard work, it is very important to strategize if you wish to gain results. And on that note, let's see how by investing in index funds and ETFs one can get rich with very low risk factor. Nowadays passive investing is gaining popularity in India, and passive investing basically means indirectly investing in equity through index funds. In this respect, we are now following the trends in developed nations, especially United States of America. There are obvious advantages of investing in index funds or index ETFs. First and foremost is the fact that when one invests in an index, reasonable amount of diversification is automatically and instantly achieved, as there are many constituent companies in any index. Secondly, the list of constituent companies is reviewed periodically so as to replace a low performing company with a better performing company. Thus, we can assume that by and large the best performing companies are always present in an index in its category. This lowers the risk considerably, and last but not the least, if we take a look at the present value of any index of NSE or BSE, excluding India VIX, we can easily see that none of the indices have given negative return if we consider the performance of respective indices since their inception. Therefore, the actual data clearly indicates that passive investing is quite safe in the long run, though in the short run or to an extent even in the medium term, there may be some risks. And if one wants to make a long-term investment in an index fund or ETF, one should choose better performing indices based on an analysis of the past data. Such an attempt was made by us by posting a video on top 3 Nifty indices giving the highest CAGR. I will add the link to that video in the description in case you haven't watched. Well, if we have to choose a portfolio of 5 indices to build wealth in the long run, the top 3 Nifty indices will evidently be there in the list. If long-term investment is made in following 5 index funds through concerned index fund or ETF, handsome amount of corpus is likely to be built over a period of time. And to reap rich benefits, short-term fluctuation in the portfolio value should be ignored, particularly in the initial period. Investment may be considered in Sensex 30 fund, Nifty Next 50, Nifty IT Index, Nifty Midcap 100 Index, and Nifty Bank Index. It may be noted that in the long run, Sensex 30 and Nifty Next 50 indices have given a return even higher than Nifty 50 Index. Nifty IT Index, Nifty Midcap 100 Index, and Nifty Bank Index figure among the top 3 Nifty indices in terms of CAGR. Please note that this video is being posted in August 2022. And when people talk of direct investment in stocks, they talk about a portfolio of stocks. In case of mutual fund schemes also, retail investors are often advised to invest in a portfolio of a large cap fund, one flexi cap fund, one multi cap fund, and one mid cap fund, etc. Now, time has come to think about portfolio of index funds also, if we want to optimize the return from investment with safety in the long run. I hope that helped, and thank you so much for listening. But in the end, let me add a disclaimer. This video is only for educational purpose. Please consult your financial advisor or do your own research before investing. Have a great week ahead and please subscribe. Thanks again.